Good morning. Thank you for joining me, Karen. Today we're going to run through the Zoopla's UK rental market report, which was issued this month, December 2024. So a lot of really interesting stats, statistics, and we covered the whole UK as well as here in Scotland during this show. So it'll be really interesting to anyone who's listening. Any questions, jump in the comments. We are live. We'll be happy to try and answer them as we go. Or if you're watching on the rerun, always jump in the comments and we will come back. So the rental market, the UK rental market, let's run through some of the main points and do the summary. So rents are 3.9% higher over the last year. So the lowest rate, but that's the lowest rate for 3 years, quite interestingly. The rental inflation ranges from a high of 10.5% in the Northern Ireland area to a low of 1.3% in London, and that's over the last 12 months. Now, the imbalance between supply and demand, that is starting to narrow, but will remain an ongoing characteristic of the rental market over the next year into 2025. Also, affordability will be a growing constraint on rental inflation in areas with the highest rents. And also the average annual UK rental cost has risen by £3,240 since 2021. Now that's a 27% increase compared to the earnings growth of 19%. So you can see how that's slightly higher than the inflation on salaries. And the average UK rents are expected to rise by 4% in 2025, with large cities and London in particularly lagging, while rents rise in more affordable areas, interestingly enough, and we're going to cover that today. Just to have a little bit of a visual perspective of things, we are I'm going to share the graph here. So this is rental demand falls from a high base as supply recovers over recovers off a low base. So up the side here, you've got the percentage from -30 up to 30%. And you could see the first two columns here, the light purple and the dark purple, are rental demand. And you can see up there at 31%, and then down there at the -29%. Now, the light purple is pre-pandemic, and the dark purple is 2023. And then likewise on the other side, this is stock of homes for rent. And you can see the dark purple then is up in the 12%, and the light purple, which is pre-pandemic, is down at -18%. So that's quite interesting to see that. And just to give you that bit of a visual perspective as well. So UK rental inflation, we're talking about it hitting a 3-year low in the summary there at the beginning. So UK rents have increased by 3.9% in the last 12 months, and that takes us up to October 2024, these stats that Zoopla has released. So that's down from 9.1% a year ago, and averaging at around 1,200. It's actually £1,270 per month. It's actually close to 1,300. And this is the lowest growth rate for over 3 years. That's going back to August 2021. And the first time that earnings are rising faster than the rents since 2021, September 2021 to be precise. Now, I actually do have another graphic that depicts this quite well. So just give me a second to pull that one up. Here we go, this one here. So if you could all see that, that's the rents rising at the slowest pace for over 3 years. So you have a combination of things here. So again, at the side, you've got the percentage, which starts at 0, you go down to -6, up to 12%. And along at the bottom, it has the year, starting at 2008, right up to 2024. Now, the two graphics here that intertwine. So you've got the purple line here, the graph, which is the rental inflation on new lets. And then you can see the bar chart and behind that, that is the earnings growth. And you could see how they intertwine. And then obviously in the last, from 2020 up to here, how the rental inflation has spiked right up. Earnings growth has as well, but not quite as high. So that's just quite a good visual representation of rental inflation versus earnings growth. So yeah, Zoopla's quite good with their graphics and showing us that on a visual perspective, as opposed to me just reading out these stats, because it's quite good to relate it visually. So then what about, Karen, what about supply and demand? Is there an imbalance there?
So, I mean, we've known for a long time there has been far more people looking for rental properties than there has been on the market. So the rental growth is slowly closing up that imbalance, basically. So the rental supply is narrowing while the supply for homes is slowly recovering. So although we've seen a big imbalance recently, it's slowly starting to balance itself out a bit now as we go on. So, however, the average rent has 12% more. The average agent, has 12% more homes for rent than last year, but this is still a fifth, which is 18% lower than pre-pandemic levels. So obviously we had a lot more supply pre-COVID than we have post-COVID. And I mean, we've seen that. We've kept quite a good balance throughout. However, it's still a lot less than what we would have had previously. And obviously there's loads of different factors that contribute to that, which we'll cover today as well. So the demand for rental homes is 29% lower than last year as one-off pandemic factors fade and the migration for work and study slows. However, inquiries for rental homes remain nearly a third, which is 31% higher than pre-pandemic levels. So we do expect that mismatch between supply and demand to continue over 2025, keeping a steady and upward pressure on the cost of renting. However, the growing affordability constraints in areas with high rental costs will help moderate the pace of rental inflation over 2025.
Yeah, okay, that's interesting. Yeah, and obviously we see it. Obviously we're boots on the ground agents, so we know we can see that, and we obviously this makes sense to us when we read these kinds of stats and trends because we see it on a daily basis. So it's quite good to see that where we are here in Fife, obviously the same kind of things are happening throughout the country and indeed obviously UK wide. What about the cost of renting? I mean, I was reading in the summary there about rents rising to over £3,000 since 2021.
Yes, so rents have outpaced the growth in average earnings over the last 3 years. So rents for new lets are £270 per month higher than 3 years ago. And that's adding an additional £3,240, which is 27% to the annual cost of renting since 2021. So it's quite a jump over the last 3 years, basically. And the average earnings have grown 19% over the same period. So you can see there's been a higher growth in the rent than there has in people's earnings, which is obviously having an effect on that as well. However, we do expect the affordability pressure to limit the rent rises in areas where rents have increased the most and where they're most expensive. So typically in London and other UK major cities, this will have the biggest impact. There remains headroom for rents to rise in more affordable areas, however, though in 2025.
So again, we've seen that. So let's take Fife just as an area as opposed to the whole UK, because when Zoopla obviously pulls these stats together, and it does pull in all these big cities like London and things down south. But obviously we're here in Scotland, but we do see some of the same trends. Now in Fife, we have St Andrews and East Neuk, which are the high value areas. But we've seen the same thing with the higher values in these areas. Obviously, the affordability is not having the right balance all the time. And some things that are obviously £1,000 and more are starting to stick a little. And you've seen that firsthand recently, Karen.
They are. So when we first came out of lockdown, those properties were the ones that were absolutely flying off the shelf. Like they were let within a matter of days usually. However, we've seen obviously the rise in living cost and just people's obviously affordability has changed since over the last couple of years. So we have seen these properties take a bit of a shift where they were really popular. They now have to be at the right price and have the right advertisement for them as well for them to actually go. So if you've not got that property on at the right price, it is going to stick. And there's a far less amount of people that are in that affordability for the higher end properties. So it is obviously restricting your market a bit with you having a property over £1,000, for example. But we've seen a lot of lower end properties that have had their rents increase as well. Because I mean, we've seen a raise in the local housing allowance, which has pushed up all your lower value properties as well. So the rents on them have increased as well. So it's just it's a very busy market still. So the rents are very much changing depending on regardless. But obviously, I think we'll touch on it as well in a bit more detail. But having a lower end property is definitely a good place to be right now because we are seeing a good push in them in the
I was
rental
just going to
values.
say, so obviously in comparison to these higher rent and higher value rentals in these areas like St Andrews and East Newton things, the more affordable areas like in Fife, as Glenrothes, Kirkcaldy, Leven, and the more mid-market range of property, we'd say anything from like 600 to about £800 a month. And they're typically 2-3 bedroom semi-detached houses or terraced houses and things. These are really popular and rent very well, but we're starting to see the push on the rental value on these as well. So we need to obviously then use our local knowledge about what people's affordability is and what people are actually looking for in the area, whether this is the right price point to be pitching at, or whether, and to get longevity out of tenancies and things as well. You price something far too high, you're going to end up with a shorter tenancy, you're going to have a lower occupancy rate, you're going to have more of a turnaround, more costs involved in that as well. So you need to weigh up these things rather than pushing for the highest rent, rather than maybe just a more affordable rent over a longer term, especially if you're an investor looking for long-term investment returns.
Exactly.
And that would be
you touched as well, obviously we've seen, for example, Glenrothes. I met with a landlord just this week actually, and they were unsure whether to sell or to rent again. Their tenants have just moved out, and I highlighted to them, even in the last year, the price of what we would have achieved for that property would have been £100 less than what it is now. So even in a year, that property has jumped up £100 per month in rent for what it is, just for the time of year, basically, because it's been over that time scale, the rents have gone up in that area. So if you're investing in the right areas, there's definitely still a profit to be made there. But obviously, we still have rental inflation, which is lower across all the regions. So Richard, do you want to give some more detail on that?
I was just going to run through that. So rental inflation has slowed across all regions, and countries over the last 12 months, apart from Northern Ireland, where they are rising off a low base on stronger economic conditions. So, for instance, London has recorded the greatest slowdown, with average rents at 1.3% higher over the last year. Now, that's down from 8.7% a year ago. London also has the highest rents, averaging at around £2,190 per month, and rents are rising the fastest in Northern Ireland at 10.5%. And the Northeast is sitting at about 8.7%, the two areas with the lowest average rents. So I've also got some graphics to go with that from Zoopla, which is quite good. And I will share and talk through that just now, just so that you guys could see that in a wee bit better detail. So rental inflation here. So if I just explain this, so rental inflation, as it slows across the areas now, that's except from Northern Ireland, as I said. So on the left-hand side, we have the percentage here, and along the bottom axis, we have the areas: Northern Ireland, the Northeast, the Northwest, Scotland, the West Midlands. And the two coloured bars, so the lighter grey colour is October 2023, so just a year ago, and the darker purple is October 2024. Now you can see that sharp rise in October 2024 figures for Northern Ireland, which is the first column, and it continues right along there. And you can see Scotland there, which is just the fourth along, and you could see it was much higher October 2023 than it is October 2024, which was just a month or so ago. And then at the very end, you can see the UK average there, and it does tend to show the trend, the same as much like we are here in Scotland, with the rental inflation far outweighed a year ago as to what it is at the moment.
Yeah, and you can see it's dropped quite dramatically as well. I mean, it's near enough halved. We've gone in Scotland from about 12% in 2023 to about 6% this year. So it's very much the important factor I would take away from this chart is make sure you've got your rent at the right level where it is actually going to live.
Yeah, you could see the second for the end there next to the UK is London, and you can see that there's a vast contrast there as well. But you made a really good point there, Karen, and that is obviously pricing the property appropriately for the market that you're in, because although the UK as a whole, we do have obviously all the regions and micro regions within that, and they do perform differently. And I think realistic pricing is the really important factor when you're listing your property, especially to have a successful let and things as well. Rents rising faster in the cheaper areas is quite an interesting one. Now, with more renters than there are homes to rent, as we can contest
We're
to,
fully aware of.
people are seeking out the best value for money, of course. Now, this means the inputs for the rental inflation is generally driven by markets with lower rental values. So we also see evidence that within cities, so like Edinburgh, Glasgow and things, rents are typically rising faster at the lower end of the market. And we see that here in Fife as well. So again, we'll go, this is a Zoopla report, so it does refer to London and England quite a lot, but same kind of trends, and we'll relate it back to Scotland and indeed here in Fife. But in London, rents are 3 to 6% higher over the last year in lower value areas, and that's in the outer of London, not obviously the city centre. And that's led by Harving, which is 5.9%, and then Barker and Dagenham is 5.2%. So rental inflation is less than 1% in inner London areas, led by areas like Kensington, Chelsea, Greenwich, and Tower Hamlets and things as well. These are all very popular inner areas of the city. Outside of London, rents are rising faster in places like Rochdale, 11.9%, Blackburn's 10%, Birkenhead is 9%, Burnley is 8.9%, and Newcastle 8.7%. Now, this largely reflects catch-up rental growth as renters seek out of areas with better value for money in and around major cities. Now, we see that same kind of trend here because the Fife is positioned in good proximity to Edinburgh, great commuter links, and it's a lot more affordable than the city. And we see people coming obviously onto the other side over to the other side of the bridge into Fife for that more affordable rent, and you're still within an hour's commute for the city.
Same with likes of areas of St Andrews as well. Obviously, you get a lot of people that we see that go to the surrounding area rather than staying in St Andrews itself to avoid the crazy prices that you do get there. So, I mean, Cooper, for example, is a really popular area for people that are perhaps working in St Andrews that don't want to pay that cost, but it's still a really easy commute. I mean, you're about 15 minutes, if that, from Cooper to St Andrews. So we've got quite a lot of people that are working at the university, for example, that stay in these surrounding areas to avoid the high cost.
We see that, and we get a lot in Cooper because it's proximity to St Andrews. It's also got the train station, so you've got that main rail link plus your 20 minutes, if that, into St Andrews for the uni or work or whatever. And rents are much more affordable than the area of St Andrews. So so changes in rent at the local level reflect local patterns of demand and supply. So rental growth has stalled and down south, like places like Nottingham, for example. It is the only city where the supply of homes available to rent has jumped over the last year, providing renters with more choice. And rents are unchanged over the last year, not surprisingly, if there's enough supply. But that's down from 10.4% growth a year ago, interestingly enough. So what about, Karen, could you run us through about maybe expansion and things and rental supply for the year ahead, possibly?
Yeah, so while the number of homes available to rent is higher than this time last year, we don't expect there to be any major increase for rental supply over 2025. Okay. The stock of homes for rent remains below pre-pandemic levels in all areas apart from East Midlands. So the private landlords continue to sell off the rented homes at a steady pace in the face of greater regulations and higher borrowing costs, despite what have been a sizable increase in rents. So even though the rents have been going up, there's still a lot of, I would say, fear mongering within some landlords. And obviously, again, rise in mortgage rates that have been going off your lending costs. It has, and changes in regulations as well. I mean, it's easy for us because we keep up to date with them so often because we manage so many properties. But when it comes to maybe a landlord managing one or even a small portfolio, it's a lot to be keeping on top of.
Yeah.
So we do see that being a factor there. But I mean, when one goes out, another one can come in. So there's definitely opportunity there for new investors to be picking up pre-existing properties for existing landlords that are looking to sell up.
Yeah.
However, one bright spot has been a more corporate investment in new build rented homes. So even in these instances, the pace of new development has slowed though. So in the face of higher borrowing costs and more regulations. However, we do believe that the peak of private landlords sell-off is now behind us. So it is a question of when market conditions look right for landlords to increase investment and expand rental supply. There's still some way off for this, however, and it requires a lower base rate and higher yields to be coming in. So we have seen a good yield, however, it does very much depend on what base rate a landlord is getting at the time or what they're remortgaging at as well.
I've got some graphics to go with that as well. So let's have a wee look at that. So yeah, and just to explain this, so that's supply of homes for rent compared to the pre-pandemic levels. Up the side here, we have homes to rent per letting agent, and that goes up 5, 10, 15 on the left vertical axis, and along the bottom axis is the area. So it's the Eastern, the Southwest, the East Midlands, the Southeast Scotland, and things as well. Now the two bars are split into the lighter grey bar is the 2017 to 2019 average, and then we've got in the purple, which is November 2024, which is just last month. And you can see there, we'll look at Scotland, and there's not vastly a lot of difference, but there is a difference there. So, but it shows the same trends for much of the country as well, that the average between 2017 to 19 is higher than what it is in the up into the last month, which is November 2024. So again, quite interesting to see that visually, just to kind of give us a visual representation of what we're talking about. Thanks to you guys in the comments, Gabrielle, Master. Angela, you're absolutely right. Angela says Guardbridge too, when we're talking about St Andrews and areas to live in, as opposed to the higher rents that are in St Andrews. We were talking about Cooper, Guardbridge as well. Rental prices are kind of high in Guardbridge as well, but still are slightly lower than actually in St Andrews itself.
Yeah, you still have that St Andrews postcode there, so
yeah, you're
paying for it, but it's a good area as well. Obviously, again, you're just walking distance to Lucas train station, and obviously still very close to St Andrews.
Yeah, absolutely. So the multiple demand side kind of drivers for renting. So demand for privately rented homes will continue to be supported by a range of factors. Now, these include the unaffordability of home ownership for first-time buyers, and so they are still feeling that pinch. They're sometimes needing bigger deposits and higher interest rates and things as well. Number two is the migration for work and study. And number three is the low growth and size of the social rented sector and social housing. And we all know that we're well behind the building targets and what the government is supposed to be building for our social housing. So that's where then the private rented sector steps in.
Yeah, I don't think people realise quite how stretched the council are in that aspect. And I mean, we see it, people that are wanting on the council list, and it's like, you could be waiting absolutely years for it, and they don't realise obviously the key factor that private sector pays, and that's what's housing all these people that can't get into the council area, or that are in a position where the interest rates are still too high for them to be able to afford to buy. So it does provide such a key aspect of the housing market.
Yeah, it definitely does. And there's one-off pandemic factors that drove the boom of the rental demand in 2022, which I don't think you and I will forget for a long time, Karen.
No.
It's such a busy time, but that's now behind us, and tighter visa rules for people, and they're starting to reduce pressures for higher rent levels on migration and things as well. But the real challenge continues to be faced by renters on lower to middle incomes who can't access social or affordable housing and need to privately rent. Now, that's almost 30% of private renters receive full or partial support from rental costs via universal credit. So the 1.5 million new build homes target is a welcome ambition, and the country needs a major expansion in the number of availability of rented homes of all tenures, and private landlords will continue to play a critical role in supporting the rental supply. And anyone who thinks otherwise is, I don't know why people think it's not as the importance of the rental sector to help the actual situation with housing at the moment. Karen, what about, is there any headroom for rents to rise further in 2025?
So we expect the rents for new lets to increase by 4% over 2025 at a faster rate than the 2.5% growth in average house prices.
Okay.
Rents are to outpace capital values for the next 3 years, boosting the yields further, which is good news for landlords. Then pieces for new regular growth in 2025 will come from areas where rents are cheaper and have headroom for the above average growth, including rural areas, small towns, and well-connected larger cities where rents are already rising more quickly. So just like we've touched on, outside of your main cities, your smaller areas, the more affordable aspects are where people are putting more of their focus into now. So we do expect rental inflation in London and larger cities to lag in the UK than the UK average, mainly because of the growth of affordable pressures and more modest growth of supply.
Yeah.
So, and again, lower mortgage rates will also play a role in stimulating more of a demand for first-time buyers in the sales market, most of whom have been from rented homes, basically. So stronger first-time buyer demand in 2024 is one of the factors behind the weaker rental demand. We expect first-time buyer demand in the sales market to remain robust over 2025, which will keep the rents in check at the middle to upper end of the market. So again, like we see, I mean, anything we have usually under about £1,000 goes within a week, 2 weeks, whereas anything over that is obviously your higher end market, and that does tend to stay a wee bit longer. So you are seeing your more kind of average affordable housing, it is still going very quickly.
Yeah. I think one thing for us to watch out is the different measures of rent inflation. So one important point is to note that there are different measures of rental inflation. Now, while the Zoopla index that we are taking this from for new lets is registering the lower rate of inflation for 3 years, the ONS private rented index is running at 8.4%, with inflation of over 10% in areas and in London and the built-up areas. So the Zoopla new lets index tracks rents when homes become vacant and relet at the open market rent. So just so obviously this is where you need to really pay attention, and then this applies to the 25% of homes per year. So the ONS index tracks rents across the whole market, covering the 25% of new lets in addition to the 75% of homes where renters aren't moving. So there's a difference there. So obviously the Zoopla index is taking it on that merit, and then the ONS is slightly different. And where the rents may have not increased at all as well. So if people are not moving or the rents have not increased, these are included in the ONS index, which is slightly different on their take on the rental inflation. So using the bathtub analogy, as they say, Zoopla's new let index tracks the temperature of the hot water flowing into the bath, basically, while the ONS tracks the temperature of the water in the bath. So Zoopla's obviously keeping track of what's coming in, and the ONS says it's already what's already in there, basically existing tenancies and even rents that have not changed. So the rate of inflation recorded by the ONS index tends to lag that recorded by the new let indicates. So it can take 2, possibly 4 years for increases in rents to spread across the whole market. And this explains why the ONS index is recording higher levels of rent inflation. Both are valuable for different purposes, and it's important to use the right index when setting your rent levels. So if you're looking and using these, obviously make sure that you're using the correct one to set your rent levels and things as well. Let's round up, Kim, because that's been a lot of good information today, and it's quite good to run through what Zoopla has to say, indeed for the UK as a whole, but also for us to break it down kind of regionally, and indeed for our own area as well. But we do have Zoopla provides quite a good breakdown of the country as a whole, and let's have a look at that just as the breakdown. Could you see that okay?
It's quite small, but I think we can get the gist.
I think I could increase the size just slightly.
Yeah, we can see Scotland. That's our main.
Yeah, that's fine. So yeah, run us through this a wee bit then, Karen, just as a wee bit of a roundup of what we're talking about the country as a whole.
Yeah, so I mean, it's quite small. You'll probably struggle to see it just now, but just to give you a bit of a breakdown. So there is a chart that runs down the top right-hand corner there as well, which highlights your city, your annual percent change in the rents, and the average rent per calendar month. So your annual percentage change in the rents is the green box that you can see there on the map, and then obviously your average rent per calendar month is the purple one. So you can see here in Scotland that annual percentage change in rents has gone up by 5.8%, which is quite good. And your average rent is working out about £834 per month. So again, in areas where you're maybe being able to pick up properties at quite good values and then obviously rent them out as well for quite a good return there, you can achieve quite a strong yield on them. So there's lots of areas, and Northern Ireland is obviously, as we've highlighted previously, that is the one that has increased the most significantly.
10.5%, yeah, that's quite a jump,
So yeah, that's very high. And again, London is the lowest at 1.3 there.
Yeah. So, and people might be interested to hear that London's obviously only the 1.3%, but that is how it is. But yeah, up here in Scotland, we are obviously jump 5.8%, and average rent £834, which has jumped up from last year, of course. But that does take into consideration, obviously, the cities and things as well. But all in all, not too bad an average rent, and kind of falls in line with our mid-market stuff that we said is still performing quite well. From that £600 to £800 a month kind of rental property is quite popular. So yeah, that was quite good. A lot of good stats here, guys. This is all taken from Zoopla's December 2024 rental market update. You could find that online. I'll have all the graphics that we've used today and all the information that we've shared. If you need any information about what we've covered, or even the local market here in Fife and indeed Scotland, feel free to jump in the comments and come to me or Kevin directly. We'll be happy to answer any questions and give you some advice if we can. And we'll just wrap up there today. That was great, Kevin. Thanks for joining me and running through that. Thanks everybody for joining in the comments. There will be a rerun of this. If it is a rerun, just jump in the comments and we can still pick them up afterwards. And I'll leave it there today and see everyone later. Thanks, Kevin.
No problem. Bye.
Bye.